Welcome back. I'm Michael Ball, and this is the Commercial Real Estate Show. If you'd like to know the absolute latest on any commercial real estate related topics, check out our on-demand show podcast. For example, last week we had an enlightening show on architecture, design, and construction. There are lots of interesting shows to choose from. Just grab your phone, tablet, or computer, visit iTunes or the show website, commercialrealestateshow.com. Well, please welcome my next guest, David Boitano, Senior Investment Officer with Ventas. Ventas is an S&P 500 company and the largest healthcare REIT in the world. Dave, thanks for joining us today.
Thank you, Michael. My pleasure.
And of course, we're talking about senior housing today. And senior housing sector has certainly been evolving as an asset class. What do you see out there, Dave?
Well, if you go back to the foundations of this industry, it really got started almost as a cottage business in the 80s with a few pioneers out there experimenting with different models that you'd probably think of as what today's independent senior living looks like. Some housekeeping, some meals, that kind of stuff. In the 90s, there was a real surge of new products and more entrepreneurs experimenting with different kind of models, and that's really where you saw the care come into the assisted living model. There was the 90s ended with a boom with a overdevelopment of senior housing, basically the new supply outstripping a growing demand. That was then reabsorbed in the 2000s. Today, what you see is by and large, the survivors, if you will, from that era, the companies that consolidated, got stronger, had professional management, and today you see a variety of different kinds of model types. You see some high-end product where the service levels are quite high, the real estate itself has a high level of finish, and maybe probably located in a major metropolitan area. You have other product that is perfectly great product, but it is directed maybe more towards a infill market or a more urban market or suburban market or rural market where you're away from the coastal areas. So today's assisted living as it's developed probably ranges in size from 40 units to 120 units with more and more situations where instead of them being single property owner situations, you'll see collections of 5 to 20 to 100 plus buildings being managed by the same company.
Right, and it's become a more acceptable sector for the institutional investors like you guys. How has that affected the investment market?
Well, it is really equaled more attractive capital for the sector in general. I started in this business as an operator in the mid-90s, and it was initially difficult to get a phone call return to find capital to develop a new building or acquire an asset. And as the first IPOs occurred in about 1995 or so, the REIT investors like us got interested in the sector, and that was really the first step of the institutional capital coming in. You then saw banks begin to participate. You saw the agencies begin to participate. If you fast forward to today, there is really a growing menu of capital providers coming in. You've got now foreign investors interested, some sovereign funds who have entered the market. Most banks that I encounter out there have some form of interest in senior housing, and that's all tended to make terms more competitive, to drive down cost of capital, which certainly gives operators and developers more options for finding the most efficient partners to help build out their models.
And how has this available capital affected cap rates? Are you seeing a lot more demand in this property type? What do you see there?
Yeah, that's been interesting as well. So we've through the recession, we first saw in the teeth of the recession, saw cap rates spike pretty much across the board. But this sector showed a lot of resilience, and both in terms of the operating side of the business. Initially, if you looked at occupancy rates in this industry, there was a little bit of a hiccup, but the underlying demand for the healthcare services that are provided in this real estate was really what drove it through, so that hiccup quickly recovered. And that strength certainly encouraged more investor demand. And so as we've seen two things, one is certainly prevailing interest rates have gone down. That helps cap rates out. But we've also seen the sector become more mainstream, so that we've had investors who maybe in the past were looking at apartments or office or malls or any other kind of real estate class have been attracted to this because A, there's been continued development, B, they see the underlying demographic push, and C, the resilience of it as an operating sector, so that you don't have many occurrences of buildings that don't work, because if you can get it constructed and if you can properly staff it and operate it, then you will have the demand out there to be successful.
Yeah, and operations are a big thing in this sector, aren't they? We're talking with David Boitano, Senior Investment Officer with Ventas. And David, I'm curious about Obamacare. Is that going to have any effect on this sector?
So Obamacare is projected to bring 25 million new insureds into the system by 2017. And so that wave in itself isn't as directly connected to senior housing as, say, to medical office, where you'll anticipate more doctor visits and that kind of thing. But the portion of the sector that I see having some impact from Obamacare are my customers who are in the nursing home business, because they are closely aligned with the hospital systems. The hospital systems are incentivized to make their systems more streamlined, more efficient. And so to the degree that a nursing home can work in conjunction with a hospital system to help them find a suitable environment for patients who are ready to leave the hospital but maybe not yet to go home, and also can provide the quality of care so that the patient isn't destined to have a readmission to the hospital. I've seen a lot of activity there for my nursing home customers. I think we will also see that extend to assisted living, if you think of a little bit of a trailing off effect, the assisted living providers as well. So there will be some amount, but it's not going to eclipse just the base demographic growth that's pushing the sector in general.
Okay. And Dave, we're short on the break, but what should we expect for amenities and design in the senior housing of the future?
Well, I think if we think about all of ourselves in terms of kinds of things we'd want to see down the road, greater and greater focus on wellness centers, places where people live and have continued involvement and stimulation. So vibrant activity areas and connections with the community around the building, as opposed to the building being sort of an island off to itself. If I was developing buildings today, I'd try to avoid the cookie cutter sort of effect and go more with flexible spaces that as interests and needs evolve over time, you can adjust the building to fit those needs.
Right. Well, Dave, thanks for joining us today. We appreciate it.
Thanks a lot, Michael. Appreciate it.
For more information from David and Ventas, visit ventasreit.com. We'll stay with us more on senior housing in just a moment. I'm Michael Bull, and this is the Commercial Real Estate Show. We'll be right back. The Commercial Real Estate Show is brought to you by Atlanta Office Liquidators, new and used furniture liquidators, France Media, publications and conferences, and Bull Realty Commercial Brokerage, a great place to do business. For more information on these companies or to access additional podcasts, videos, or blogs, visit commercialrealestateshow.com.